Today, stocks come crashing lower. Is the AI bubble finally starting to pop after a $600 billion fraud was finally revealed? Now, when we come over and look at the fear and greed index, right now we're over in the 7. Keep in mind, the lowest reading I've seen in the fear and greed index has been 3. So are we getting ready for a bottom? If you go right back here, back to April, we can see when the market bottomed out, we had an extreme fear reading of 3, and now we are currently sitting at 7. So are you willing to go ahead and buy the dip at this time? Come on, we're looking at the most recent investor sentiment survey. We see the bulls just barely notched up a bit. Last week, it was a reading of 31.6. This week, a reading of 32.6. And we saw the bears drop off this week as well. Went from 49.1 down to 43.6. However, with NVIDIA come crashing down after having a massive gap on the way up, to me, this is very problematic. If we look at this on a 30-minute intraday chart, look at that large gap we have, only to come down, fill the gap, and basically come right down, testing the lows from a few days back. We come over and look at the VIX. The VIX today closed out at 26.5. If we look at the highest reading today, right around 28.21. Now, today on the live stream, we kept talking about this. We had a lot of GEX exposure right here at 25, and there was quite a bit at 30. But now that the market has closed, look how much GEX has grown at that 30 strike price. To me, this is a very clear indication the VIX is likely going to spike up towards that area. And if you guys were on the live stream earlier today, right around 19, we had a lot of GEX exposure out there, as I showed this morning on the live stream. So when the VIX came crashing down this morning, it's really no surprise that the VIX this morning found a bottom right near 19, right around 1930, before ultimately come ripping to the upside. So what caused stocks to come crashing lower? We can see right here, NVIDIA turns negative after Ray Dalio warns the latest market boom is a big bubble with big wealth gaps poised for a political explosive burst. However, there's something else that was brought to my attention by other traders out there, and that's going to be this article right here. The algorithm that detected a $610 billion fraud, how machine intelligence exposed the AI industrial circular financial scheme. Now, I'll link this article in the description box down below. You can actually listen to it. It's a very good read. You definitely want to pay attention to what they have going on inside that article. But Michael Burry's been warning us about this, and I think it's kind of funny because early on when NVIDIA was rocketing up this morning, people are like, oh, well, I guess all the bears and Michael Burry was wrong. Well, what do we see today? NVIDIA came crashing down, and Michael Burry's been talking about all this circular, financing, suspicious, and potentially fraud out there. I said potentially. I'm not guaranteeing it is, but it does look a little suspect on the accounting schemes that they're using. And here's a question for you guys as well. Michael Burry says, one more, OpenAI is the linchpin here. Can anyone name their auditor? Let me know in the comment section down below. Does anybody know who the auditor is of OpenAI? Now, we come over and look at the dollar index today. Dollar index barely got right here, right above this high, then came right back down. Kind of a candle of indecision. Wick on the top, wick on the bottom of that candle. We come over and look at the precious metal gold. Gold today, kind of just a doji candle, wick on the top, wick on the bottom. But you can see we have a high, we have a lower high. Are we about to make a lower low? However, I think where I really want to focus my attention on is going to be right back over here to the SPY. SPY today looks very similar to what we saw with NVIDIA, and very similar with the QQQs. Now, why would that be? Why do all these charts look so very, very close to one another? Well, if we come over and look right here, we look at the weighting inside the NASDAQ. Now, earlier today on the live stream, NVIDIA was at over 14% of the total NASDAQ. Now, after it comes crashing down today, it's now only at 13%, but still, that's quite a large weighting for one stock out there. Now, when we come over and look at how the indices fared across the board today, the Dow was down 386 points. The NASDAQ was down 486 points. S&P 500 down 103 points, with the Russell 2000 being down 4.26. Now, when we look at advancing issues versus declining, it's really no surprise that we had overwhelmingly to the sell side. 71.9% of stocks were declining on the day. Then as we come over and look at the sectors across the board, we only had one sector in the green, and that was consumer defensives. Every other sector was in the red. And look at technology. It was the one leading the way, which is really no surprise given how NVIDIA was. Now, if we look out here on the daily chart, notice we have now completed the ABC pattern down on the NASDAQ, taking out that big nasty Friday candle we saw several weeks back. And the question is now the time to buy? Because if we look at the MACD indicator, still looks horrible out here on the daily chart. We look over here on the 4-hour chart, MACD indicator is still showing no signs of firming up yet. Then we look over here on the 30-minute chart. You can see we came back above the zero line, boom, right back down, showing no signs of firming up just yet. And ask yourself this question: with the sell-off today, if we get another continuation of this tomorrow, are you going to want to be a buyer going into the weekend? When we look at the economic counter we had today, we got non-farm payroll numbers come out, came in at 119,000, but look at the last reading we had. They actually revised it down to a negative number, negative 4,000. And then we look at the economic counter for tomorrow. What do we have in store? Well, tomorrow, it looks like we have flash manufacturing PMI, flash services PMI, along with revised consumer sentiment. Now, we already know consumer sentiment has been in the dumps. I don't think the government shutdown is doing anything to help that out. And Apex has 80% off all their valuation accounts, $40 activation fees. To take advantage of this offer, use the link in the description box down below. Use promo code Mike at checkout. Let's now come over and look at the GEX levels for the QQQs. And we can see now that 591 strike price most certainly has grown out here substantially. And when we go ahead and we look, where do we close at? Oopsie doopsie, we close below that level. Now, this could be problematic. Now, normally what we're going to see is right around that 591 strike price, they're going to try to defend it. We have some more GEX right down here at 586. We start breaking below that, which we're currently at. 581 comes into play, and then maybe even all the way down here to 576. However, if you are looking for a bounce in the market, let's wait and see. Can we get above 591? If so, then maybe the Qs will be able to go ahead and bounce on the way up. We can see we have a high volume node right up here at about 598.04. And this large down candle can provide a very good reference point. For instance, we start getting above 50% of that candle, there's a good chance we can go ahead and undo that entire down candle that we saw today. However, I don't know the market's ready for that just yet. We come over and we look at the futures markets real quick. What do we have? Well, on the 4-hour chart, this ABC pattern we've been tracking out here for many, many days finally went ahead, hit the target right down here at 24,256. And we were almost able to take out that untested point of control down below us that came in all the way down here at 24,073. Now, if I move this up here just a bit, notice we have that high volume area right there. And the question is, are we going to find some support? If so, I would expect the market to kind of back up towards this area, fill in this minus development area. We also have a structure breakout point, and that would be candle low right up here to the candle bodies. And this would be a logical area to see the market come back to, but we want to be cautious with this. If you're looking for this for a high probability retest, keep in mind this last 4-hour candle, we've already come up into that area. And remember, the first test is always going to be the best test. Now, this morning, they gave a very beautiful layup. It's a little bit easier to see out here on the S&P. They basically went ahead and set the trap. Last night, we closed above value area high. And I said earlier on this morning on the live stream, as we were running up here, well, maybe it's going to be tomorrow before we come back and hit value area high. And before you know it, boom, all the way back down here. On the live stream, we're also talking about this structure breakout point right here. We broke above it last night. I said, highly probable we will come back and visit that level. And most certainly we did. We also were able to take out the P point, but notice, what are we doing today? We are closing below value area low at 24,439.5. Now, the rule behind that is just like yesterday, whenever we close outside of value, we expect the next 1 to 2 days, we will come back and visit that level. And keep in mind, with the stock market selling off, don't be surprised if the plunge protection team steps in. And keep in mind, they've already been prepping us that we have the potential for major trade deal announcements in the not too distant future. Now, we come over, look at the SPY, kind of the same thing as the NASDAQ, big, nasty, bearish engulfing candle. MACD on the daily chart looks horrible at this moment. On the 4-hour chart, looks horrible, no signs of firming up, and even on the 30-minute chart. Now, we do have a little bit of MACD divergence setting up. Notice the low right out here. It's lower than what we had over here, but then we draw a line across the MACD indicator, and notice the MACD indicator is not at new lows. Then we couple that with the fact that we are way over into extreme fear with a reading of 7, which is really primed to get a short squeeze rally at any moment. So we do want to be well aware of that. If we can get above the point of control tomorrow, keep in mind, we have some minus development areas within the profile that would make logical sense for the market to come back and potentially try to retest. As we come over and we start looking at the 4-hour chart, notice the S&P finally was able to take out the ABC pattern to the downside. However, if we continue to go down, maybe down here during Asia or London tonight, we have a high volume node down here at 65.25. If we come down there, do we try to bounce up from that area and maybe come back and try to retest this structure breakout point? similar to what we talked about with the NASDAQ, the next candle has already come back into that area. So remember, the first test is always the best test. However, I would not be surprised if we come back up. Normally, after we complete an ABC pattern, the market does something other than continue in that direction. Now, we come over and look at the daily profiles. We did not close below value area low like the S&P. Value area low, 6550.50. This could be my line in the sand. If we are trading above that tonight, I want to give the market the benefit of the doubt. Can we come up, hit the point of control at 6595.00? And have you guys been able to catch on to the pattern lately? Lately, if we've been running up in Asia and London, what have we done during the New York session? They basically sell it back off. Last night, they ran it up. We had a consolidation. Here was the trap. And we were talking about this on the live stream. I said, if we get back below this high right here, watch out, we could potentially come back lower. And this morning, even more specifically, which I was kind of proud of myself for it, but I said, if we cannot get below this call resistance right here, then I don't want to be on the sell side of the market. And I did a very good job of not trying to short as the market just kept trying to go up. So I was proud of myself on that. However, I did not trade the best this morning, but once that gave way, it basically just opened the door on the way down. Now it's really surprising that we hit the 1-day max and we got below the 1-day minimum during the same trading session. Now, in the event that we can break above the point of control out here from today, then where are any other logical volume profile targets? Well, I would like this minus development area right up in here, and that would come in anywhere from about 66.57 to about 66.70.00. One other thing I want to do is pull a Fibonacci retracement from the high all the way down from the low today. Now, keep in mind, if we do go lower come tonight, I want to go ahead and drag that down to get a more accurate reading, but I got to use the low that we currently have. Notice the 50% level is right at the top of that minus development area, and the S&P loves to retrace the 50% level, and that could still keep us in the downtrend that we are currently in. And you might argue, Mike, we are not in a downtrend. Well, go ahead and define a downtrend for me. Here's a high, lower high, lower high. Here's a low, here's a low, here's an even lower low. So by definitions, we are in a downtrend. However, if they come out with some type of tariff announcement, maybe that'll be enough to get the market to bounce up. Now, if you guys like to trade with prop firms, especially in this high volatility time, and you trade micros, you want to make sure to watch this next video to see which prop firm is the best for trading micro futures.